Greetings, future investors. Welcome to Caffeinated Money, your hotspot for all things finance. Today we're brewing up a special blend of knowledge about the stock market, an essential arena for anyone looking to grow their wealth. Understanding its ins and outs can be a game changer, especially for new investors. So, buckle up as we demystify this financial powerhouse. Before we dive in, do us a favor by hitting that like button and subscribing to our channel. It helps us to keep brewing up new content for you. So, you're curious about the stock market, but what exactly is it? Well, let's dive right in. Picture a bustling marketplace, but instead of fruits, vegetables, or handcrafted goods, this marketplace deals in shares. These shares represent a slice of ownership in a company. When you buy a share, you're essentially buying a piece of the company. You become a shareholder, and you now have a vested interest in the company's success. Now, where does this trading happen? It occurs on something we call an exchange. Exchanges are like the physical locations of this marketplace. Some of the most renowned exchanges include the New York Stock Exchange and the NASDAQ. But wait, there's more. When you hear about the stock market in the news, you often hear terms like the Dow Jones, the S&P 500, or the NASDAQ Composite. These are what we refer to as indices. An index is essentially a collection of stocks that represent a specific segment of the market. For instance, the Dow Jones Industrial Average includes 30 of the largest and most influential companies in the United States. These indices give us a snapshot of the market's overall health. So, how does the stock market work? It operates on the basic principles of supply and demand. When more people want to buy a stock, demand, than sell it, supply, the price goes up. Conversely, if more people want to sell a stock than buy it, the price goes down. The stock market also serves a crucial function in our economy. It provides companies with the capital they need to grow and innovate. In return, investors get the chance to share in the company's profits through dividends or by selling their shares at a higher price. But remember, the stock market can be volatile. Prices can fluctuate wildly based on a myriad of factors, from economic data to geopolitical events, not to mention the company's own performance. So, while it can offer significant returns, it also comes with its share of risks. In essence, the stock market is a marketplace where buyers and sellers trade shares of publicly listed companies. It's a place of opportunity, of risks, and of potential rewards. It's where dreams can be made, but also where fortunes can be lost. So tread carefully and always do your homework. You might be wondering, why should you invest in the stock market? Well, let's delve into this. The stock market is a wealth-building machine. Over the long run, it has consistently proven to be a reliable way to grow your money. This is because, on average, the stock market tends to rise in value over time. With patience and a long-term perspective, you can ride out the inevitable ups and downs and potentially see solid returns. Another advantage is the potential for dividend income. Some companies distribute a portion of their profits back to shareholders in the form of dividends. If you invest in these companies, you could receive a regular income stream on top of any potential capital gains. This can provide a nice cushion of passive income. Diversification is also a key benefit. With thousands of stocks to choose from, you can spread your investments across various sectors and geographic locations, reducing the risk of losing all your money if one investment doesn't perform well. However, it's important to remember that investing in the stock market is not without risks. Prices can fluctuate dramatically, and you could lose some or even all of your investment. Therefore, it's crucial to do your homework, understand what you're investing in, and consider seeking advice from a financial advisor. Despite the risks, investing in the stock market can be a powerful tool for building wealth over time. So, are you ready to embark on your investment journey? Now that you have a basic understanding of the stock market, how do you get started? Well, the first step on your journey to becoming an investor is to research and choose a brokerage. This is a firm that buys and sells stocks and other securities on behalf of its clients. In today's digital age, there are many online brokerages that offer user-friendly platforms and low or even zero commission fees. Some popular brokerages include Fidelity, Charles Schwab, and Robinhood. When choosing a brokerage, consider factors such as its reputation, the services it provides, its fees, and the quality of its customer service. Once you've chosen a brokerage, the next step is to open an account. This process is usually straightforward and can often be done online. You'll need to provide some personal information such as your name, address, social security number, and employment details. You'll also need to answer some questions about your investment goals and risk tolerance. This information helps the brokerage to provide you with appropriate investment advice. After your account is open, it's time to start understanding and choosing stocks. A stock represents a share in the ownership of a company and constitutes a claim on part of the company's assets and earnings. There are two main types of stock: common and preferred. Common stock usually entitles the owner to vote at shareholders' meetings and to receive dividends. Preferred stockholders generally do not have voting rights, but they have a higher claim on assets and earnings. When choosing stocks, it's essential to do your research. Look at the company's financials, its growth prospects, its competitive position in its industry, and the dividends it pays. It's also a good idea to diversify your portfolio by investing in stocks from different industries. This can help to spread your risk. Once you've chosen your stocks, the final step is to make a purchase. You do this by placing an order with your brokerage. There are several types of orders you can place, but the most common are market orders and limit orders. A market order is an order to buy or sell a stock at the best available price. A limit order is an order to buy or sell a stock at a specific price, or better. When you place an order, you'll need to specify the number of shares you want to buy or sell and the price you're willing to pay or accept. Once your order is filled, the shares will be added to or subtracted from your account. And there you have it, you've made your first stock purchase. Congratulations, you're officially an investor. Let's recap what we've learned today. We dove into the fascinating world of the stock market, a dynamic marketplace where shares of publicly traded companies are bought and sold. It's a bustling hub of economic activity where every transaction represents the hopes, dreams, and strategies of investors from around the world. We delved into why it's beneficial to invest in the stock market. The potential for high returns, the opportunity to own a piece of your favorite companies, and the chance to build wealth over time are just a few reasons why millions of people choose to invest. But remember, with high rewards come high risks. It's crucial to balance your investment portfolio, understand your risk tolerance, and invest wisely. Next, we outlined the steps to enter the stock market. It all starts with education. Understand the basics of investing, learn about different types of stocks, and familiarize yourself with key investing terms. Then, set your financial goals. Are you saving for retirement, a down payment on a house, or your child's education? Your goals will guide your investment strategy. Once you're educated and have clear goals, it's time to open a brokerage account. This is your ticket to the stock market. Choose a broker that fits your needs, deposit funds into your account, and you're ready to start buying stocks. But remember, the stock market isn't a get-rich-quick scheme. It's a long-term game. Be patient, stay disciplined, and regularly monitor your investments. Remember, investing is a journey, not a destination. Stay tuned to Caffeinated Money for more insights to fuel your financial voyage. Don't forget to like this video and subscribe. Until next time.